BNB forecasts point as high as $1,115.47 for 2026, but the live chart is still wrestling with resistance near $651. The tension is that long-range targets sound bold, while the current market is working through much smaller support and resistance decisions. BNB price targets now points to BNB as the center of the story, not a broad market mood. The first thing to separate is the event from the interpretation. The event is forecasts cite $1,115.47 for 2026, and the pressure point is that the live level comes first. That gives the segment a concrete test instead of a broad mood read. A viewer can immediately judge what changed, which actor matters, and what signal would confirm follow-through. BNB was trading around $636.74, with about $1.28 billion in daily volume, support near $632, and lower band support around $590. This is the baseline viewers need before treating the move as bullish, bearish, or settled. The number to keep visible is $1,115.47 target. It anchors the scale and prevents the scene from drifting into vague sentiment. BNB trades near $636.74 is the confirmed frame, while volume was near $1.28 billion sets the practical boundary. If later claims appear, they should be compared back to this frame rather than accepted because the story sounds urgent. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism combines Binance ecosystem utility, token burns, discounted fee use, and short-term technical levels that decide whether buyers keep control. In plain English, the mechanism explains why the headline matters. For BNB, it is not a side detail. It is the reason the event can affect users, markets, or institutions. Burns and utility support the model is the working part, and discounted fees keep utility visible explains why the outcome is not automatic. A headline can move attention, but this mechanism decides whether the event has repeatable consequences or only a short reaction. The affected side is BNB traders, Binance users, and holders comparing ecosystem demand with regulatory risk and market volatility. This is where the practical consequence sits. The story is narrower than the whole crypto market. It focuses on Binance, BNB, and the counterparties tied to the same path. Binance users are the demand base is the exposed side, while holders face volatility and rules. That prevents overreach. The segment does not claim every token, chain, user, or institution is equally exposed. What remains unclear is whether the 2026 forecasts reflect durable demand or simply optimistic models that depend on broader market strength. That distinction matters because traders and users can overread a first move. A useful viewer should not fill that gap with a prediction. Targets still need market proof is where evidence stops, and models do not guarantee price defines the proof that would make the next claim safer. That keeps the uncertainty useful. It tells viewers exactly which assumption should not be treated as fact. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is whether BNB can hold support, break $651, and keep volume strong enough to validate the recovery. For BNB price targets, the closing read should stay tied to the next observable signal, not a prediction. If that signal appears, the story gains confirmation. If it fails, the market has to treat the earlier move as incomplete. The practical close is support must hold near $632. That keeps the ending tied to a measurable signal instead of implying a guaranteed outcome. It is the readout the viewer can carry forward after the card ends and the next market or policy reaction begins.